Just think about Charles check and all this need, the tourism here, the spending and working currency. You don't have to bother, right?
Are you going to take pictures? Or you can go
LA Fintech live.
Let's just sit down here.
Scan their
Right there's fine, wherever you want, dude.
I'd rather sit down. Why not? Everyone can sit. We have enough chairs.
Yeah, everybody can sit here.
I'll stand.
Yeah, just stand over there.
I mean, you're an expat. No, it's like I just moved from Paris back home, and I can tell you, it's such a nightmare.
All right, so we got some chairs over there if you guys want to sit down.
Bank account in France, be able to send my money back here, pay my bills. It's like a month after.
Make it more comfortable.
Money in my bank account. Chair. Focus on
All right, thanks a lot for coming down. We got Daniel from the Block Park. He's going to talk about his real estate blockchain crypto project. Off I go, yeah. So thanks for coming. My name is Daniel Reisberg. I'm the CEO and founder of Block Park. I want to say thanks to Jeff Martinez. This is a great platform. I've been to Korea, I've been all over the place, I've been doing 3-minute pitches, and this is just fantastic. I gotta say, it's comfortable, relaxing, it's more intimate. I like the club, I like the space. Jeff, it's community, what do you call it? Organizing. So, trying to make LA Fintech a big deal. I'm for that. All right, so I'll get started. So Block Park, how many people been to the website? Or anyone else know about Block Park?
I check our website.
All right. So Block Park, at the end of the day, Block Park is a community building, property management investment platform. All right. It's designed to increase yields for owners and give tenants a vested interest in a building or a community that they don't even own. All right. And how do we do that? We do that by implementing a token economy. These are security tokens. Our tokens are called block tokens, and what they are dividend-bearing security instruments, fully compliant with the SEC, that will become unrestricted securities that will be used within our property management software. All right, the tokens have a hybrid functionality. So one aspect is being a store of value, and the second aspect is being a medium of exchange within a defined market, our ecosystem. Our ecosystem is any property on our blockchain. Any property on our blockchain can be on the blockchain by using our SaaS software API that just gets plugged in right to their website. So it's property management that implements a token economy, which is the block product. So that's that. How does it work? So it works this way. So when a tenant signs his lease, they create a user profile, which is similar to what we do now. How many people pay rent? Pay rent? Pay rent? So when you go online, do you go online and pay rent?
Yeah.
Do you have an account, correct? I do too. I have Bank of America. I just, okay, like pay it, whatever. So it'll be the same thing, except for our software comes with a digital wallet. So our system has what we're calling an under the hood alternative trading system. Right, so when you pay, let's say it's $1,000. We incentivize our tenants to pay on the first by crediting them or rewarding them with those security tokens, which gives you a vested interest in the property or in the community. Yeah. Oh. So what that does, how that works is, okay, so you pay your rent, let's say it's $1,000. So you pay your rent, it's $1,000. If you pay on the first, boom, congratulations, I'm gonna give you 5% back in block tokens. But these block tokens are securities. So you have 3 options. You can trade it out for Bitcoin or whatever else you want on the exchange. You can liquidate it for your $50 cash, or you can hold on to it because it's a dividend-bearing security token and you're actually investing in your own community that you're living in. So that's pretty much how it works. Yeah, all right, should we go with questions?
What's the value to the buildings that you own? I can't understand that there's the security aspect. Where's the value proposition for buildings?
So all right, so the value on let's go all the ways. All right, so the value for the owners, we're on blockchain. We're using blockchain technology. So the value for the owners, not only do they get the tokens too, so they get both. They get the cash and they get the tokens. So let's say you're an owner, you own a property, you own a, whether it's commercial or residential, or let's say it's mixed use, it's both. So not only are you paying a subscription service for the software, you're getting all the revenue that you're already generating, minus the property management fee, which is 3%. So now we're implementing an entirely new asset class using these security tokens. So those security tokens funnel through the system and they come back to the property management company, which is BlockPark Technologies. Now we hold those tokens, and by holding those tokens, we're actually creating value just by the hold, right? And by having a fixed amount, a finite amount of security tokens within our ecosystem, the value should go up based on the growth of the company. No longer are we tethered to outside market conditions. God forbid a recession or something like that happens. We're actually running. We can increase yields just by how big we are. So the owner gets a percentage of the tokens, which can be negotiated. They get their revenue in addition to that, and eventually you can quantify the yield that's being generated through their property portfolio. So that's one. Two, they can have all the benefits of blockchain technology, and we're shelving that. I don't even talk about that right now, but because the reason is because the security token is such a big deal, such a game changer in the industry, that I tend to focus more on that. However, blockchain technology, at the end of the day, depending who you're talking to, is a trust network. Or if you're talking to a crypto person, it's a trustless network, right? Do you own investment property?
I have.
So, property managers, terrible, right? They suck. They're horrible. Property management is the number one thing. I don't care if you're running an Airbnb or if you're running, a 30 unit portfolio or whatever. Property management is a big deal because at the end of the day, it's centralized. You just don't know what's going on. God forbid they're stealing from you, they make mistakes. You just don't know what's going on. Property management is the number one issue in multi-unit investing, anything, portfolio investing. So with blockchain technology, it's decentralized, right? No longer can anybody, manipulate or mess with your money at that point. So that's one. So it's trustless. Two, verified financials, verified assets. We've all bought property, or some people bought property. So if I'm buying an investment property, let's say I buy 10 investment properties. I'm going to get back 10, if I put an offer on 10 different properties, I'm going to get 10 back, or I'm going to get 10 P&Ls back. They're usually on PDF, maybe if I'm lucky, it's an Excel sheet. And if that's the case, okay, cool, the numbers just maybe add up. At the end of the day, if I ask for a 60-day escrow, I probably won't get it. Why? Because they want to sell it quickly. If it's a good property, they're going to want a 30-day escrow. So with that, it's like, all right, I have 30 days to make a decision to buy this property. They're telling me my revenue is generated, my ROI is going to be this much. Okay, at the end of the day, I roll the dice, and 6 months to a year later, all right, cool, we're here. We're here. Or I have a lending background. So from a lender, it's like, well, we don't know it either. We're going to condition the hell out of you. And at the end of the day, okay, we're going to approve the loan after you put it through the grinder, But on blockchain technology, it's verified financials, verified assets. No longer do we have to worry about, are these numbers real? So that, and like I said, I'm shelving that, but that's what blockchain can do. It's trustless. It's actually real numbers, real math. And what's good with that on the ownership side too, or the property manager side, is no longer are property managers having to worry about collecting rent, or even having to evict people or anything like that. Why? Because it's automated, it's math. So our property managers become property concierges. We're community builders, so our property managers are more concerned with making sure our tenants are communicating, making sure there's a platform that they can build on. If you're an artist and you live in our building, you want to curate a show on the rooftop, we're here to help you for that. All that stuff. We're here to host movie night or whatever it is. You want a partnership with the bar or the restaurant here or a wedding or whatever it is. We're here to help. So that's the community building. That's how we're tethering the owners and the tenants' interest. We're aligning their interest to have a stronger economic output. And by doing that, to do that, we're creating more wealth, right? So we're giving money to both parties to invest in their communities and have pride in their communities. So that's the owners. The tenants, I just said it. So the tenants get money. Not only are they going to be incentivized to pay rent on the first, but they're going to have pride in their community, knowing that, hey, I just pay rent when I make money? Really? Okay, that's great. Not only that, but my ownership here is incentivized to help me, to be here. Community is everything. The people that you run into, that you engage with, sort of molds our lives, right? We are who our friends are. So it's great. And by the more diverse community we have, the more we learn, the more we grow. And when we grow, we become inspired. When you get inspired, you create. When you create, you produce. So that's everything. On the tenant side, and you make money. We did tenants, we did owners, property managers. Also, they get money too. So they do less work. They feel more engaged within their own building that they're managing, and at the same time, they're getting a percentage of the block token as well.
How far are you in development?
So yeah, all right. So there's 2 developments. So the offering right now, we're live. So it's a Reg D 506C. We are a security token, which is lame because that is what that means is we're having to go through all sorts of compliance with the SEC. It's a big deal, which means we can only have accredited investor to come in, and unfortunately, that's the exemption. But that's accredited investors, but we get general solicitation. So general solicitation is great, but what's unfortunate about it is on all the big social platforms, Facebook, Twitter, Google, because we're associated with cryptocurrency, we can't advertise. We can't general solicit on those platforms. So we're kind of, it's a double-edged sword. If I were to do it again, if you guys were going to do a security token, I would do a 506B, which allows for 35 unaccredited investors, and go through LinkedIn, do that manual connection. It works. But we're a 506C, so right now, any money we're raising, we're actually securing it to our development project in Las Vegas. So right now, like I said, my background, so I'm a real estate finance guy. I started in 2003, worked for a big brokerage nationwide. I became a principal for a company called HC Financial. We used to go around the country and package multi-unit portfolios and sell them to California investors. Then the crash happened, and I went back to almost to my parents' house, but I had to basically start over. And I got my broker's license, and I just started my own shop. But a lot of my clients were those same investors from back in the day. So we just started doing multi-units again, and it was great. So me and 2 of my closest friends started a company called BDR Cascadia, and we started flipping houses, which I hate. I feel like it's like bottom feeder stuff, but we did nicer end stuff. Sorry, if you're but hey, if you can make money on it, great, fantastic. I got no shame on that. But the thing is, with multi-unit, you can do value add. There's so much more you can do. I hate being tethered to the market. I hate government regulation deciding what my plays are. So I want to cut that cord. So multi-unit, you can do that a lot better. So with multi-unit, we started, really picking up steam, and this is 2012, 2013. Started buying like duplexes, triplexes here, and we sold one. We bought it for like $500,000. We sold it for $850, and we took all our money on that, and we bought in Las Vegas 5 properties on the same block for $2.6 million. And I'm from Las Vegas, born and raised. And I left Las Vegas as soon as possible because I hated Las Vegas. If you weren't into MMA, if you weren't into like trucks or whatever, or tattoos, then Vegas is not for you. So I just left. I liked LA a lot better. And if those of you at home, if you're from Vegas, I do love Vegas now. But anyway, and I got a lot of respect for where I grew up. But what's going on in downtown Las Vegas is a total resurgence of not only like economically, but like for identity, for local identity. What's going on there now is above and beyond gaming and entertainment. It's self-identity. It's having self-worth. It's growing beyond yourself in a real community, and that's something Vegas did not have before, which now is there and it's prominent and it's downtown. So we bought those properties, and I'm like, great, let's see what happens. Let's see if our tenants pay. Let's gauge this. Actually, just had a homeless man set fire to our dumpsters this week. Sorry, yeah, side story. So anyway,
Side note.
but it's been great. We've been seeing 25% appreciation a year. On top of that, downtown Vegas has been one of the highest appreciating parts of Las Vegas, and Las Vegas, I think, is in the top 5. Used to be #1 appreciating city in all of the United States. So it's great. So we've been loving it. So because of that, we decided to get entitlements. Let's see what we can do. Let's build up if we can. So what was awesome was, we were talking about this, Norm, is the government was so behind us. We're in an opportunity zone. So because what an opportunity zone is, it's a tax haven for governments or local governments that want to put, want to bring developers in to redevelop the neighborhood that used to be, popular and cool. To make it nice again and to bring in the community. So they're offering tax havens such as if you come in, you don't have to pay your, if you sell your property, the income that you made, the gross income that you put into that property, you don't have to pay taxes on that after 10 years. It's forgiven. So that's what an opportunity zone is. That's the big one. So there's all these opportunity funds going up. And on top of that, there's these other incentives like reducing parking requirements, which is huge for us. So our initial structure was 2 towers, 15 stories each, and the structure had a 9-story parking garage just to meet the stupid parking regulations, which is 1 to 1.5 units. So for every unit, you needed 1.5 parking stalls, which ended up being a 9-story parking garage. And who wants to drive up 9 stories, But we did something cool. So we had, because we're 15 units, we had the 9th story of the parking garage was butted right up against it. So if you parked on 9, you live on 9, you just walk right over. It's cool. But it was not efficient. Our efficiency rate was, probably in the 60%. So I couldn't make it work. The project wouldn't pencil. I couldn't bring in water. So I couldn't make this project pencil, and I didn't know about the RTC. I didn't know it's called the TOD, the Transportation Orient Development, whatever that is. So I didn't know about it. I still don't really know about it, but I hired a developer out of Chicago. They're called Activity Partners, and they built the Ritz-Carlton Hotel in downtown Chicago, the Omni Hotel, and several others across the country. I said, hey, look at this. Can you make it pencil? Can you make it work? I'll hire you. So for $135,000, these guys came on board, and they've been working with the city, and they made it work. We already got our entitlements and everything else. So going back to Block Park Technologies, with my property management community building software, we are going to raise money, or we're raising money through that company, and everything we raise is 100% secured by that development project, which is expected to pay a net multiple of 3 times. It's also expected to pay 21% IRR, and our developer's yield is 8.5%. So market there is 6.5%. And this is going to be a new building, so we can probably get away with 6%, which is the spread. So if you're talking 250 basis points on $90 million, that's a big deal. So so it's attractive and it's good. But on the real estate side, especially if you're talking to the old family offices and whatnot, they're hesitant. Anytime you mention blockchain or cryptocurrency, they're skeptical. And then on the crypto side, they're like, "Well, real estate, it takes forever." So especially if you're a security token. Unfortunately, because of the Reg D 506C, there's a 1-year hold before we go unrestricted. And even then, my attorney gets on my ass because he says, "Look, you can't say we're going to be unrestricted in 1 year. We got to file a Reg A, Reg A plus, and at that time, we become unrestricted. However, we're not there yet, so I just can't say that. So when I'm trying to raise money from crypto people, they just want to trade. They just want to, they just want to pump and dump. So that's the conundrum that I'm in right now. But anyways, it's a fantastic project. Like I said, it's all about the community. That opportunity zone, what's great about those is they are usually like central markets, right in the middle of the city. You get all that, the transportation stuff, all the restaurants, everything as far as, subways and buses and all kinds of new stuff that's going into, downtowns, whether it's culture, plays, that sort of thing. It's all happening there, so it's awesome, and that's where we're at. So anyway, other questions?
question that I'm a little confused about. So, how the money is coming into the system? You know, let's say there's an enter, you would give them some of your coin, or they can liquidate the coin and they get the $50.
If they're a tenant or if they're
If they're a tenant.
an investor.
If they're a tenant.
A tenant has to pay in fiat. You can probably pay in block token, but it's fiat based. You know, mostly for the property owner. They want their money. They want their fiat. But what's happening under the hood is the money gets paid. So your rent's $1,000. So you pay right into the system, and what you're really paying into is you're buying shares of stock. So let me be very clear about this. We're forcing all our tenants to buy shares of stock, which are dividend-bearing security instruments, shares of stock of Block Park Technologies in the company for every time you pay rent. You don't have a choice. But it's not hard for you. You know, for you, it's like, oh, I'm paying my rent. So when you do that, you get the shares of stock right away. So if your rent's $1,000, you get $1,000 worth of block token. Now, block token might be, you know, you might have 10,000 block tokens. You might have 0.0005 block tokens. But whatever it is, you have that $1,000 back in block tokens. But we're charging you block tokens. The system charges block tokens, not fiat, even though we're taking fiat. So we're charging you $1,000 worth of block tokens. So we're taking that all back. However, because you paid on the first, we're going to give you 5% back in block. So if you pay on the second, 4%. If you pay on the third, 3, 2, 1. If you don't pay back on the fifth, you get an eviction notice. You know, it's like everything's mad. You know, and that's okay. You know, there's eviction laws in there that we can't like totally kick you out. But somebody said, my developer was like, you know, we can lock the doors too. You know, everything's like automatic. Like on the fifth, we can just lock the door and they can't get back in. But you can't do that.
So then it's not from the tenant perspective. So how about the investor?
So the investor, right? The investor, we take fiat, Bitcoin, and Ethereum.
Is it ERC20?
So no, we're on Stellar.
Okay.
Hello. So that means that's how you guys keep the value of your currency, because you guys, anytime someone pays rent, they reevaluate.
Yeah. So the value. So that's a good question, OG. That is a really good question. So all right. So how are we keeping the market right? How are we preventing like a pump and dump? So the property entitlements and everything we have, the appraisal, which you can download on the website, it's the full appraisal. It's an MAI appraisal, which is the highest appraisal you can get, most certified appraisals. It's worth 4.4 million, and that's what we have right now in the entire. 4.4 million. So that's why our cap is 4.4 million, because that's all, you know, the property is worth. However, our equity partner is 10 million. So whoever comes in as a general partner, they got to come up with $10 million. The first 4.4 million, hey, you get 44 million block tokens with it. As an addition, if nothing happens with the block tokens, you still have an equity partner in this downtown Vegas high rise, right? But if the block tokens end up being something and they're unrestricted securities, then, you know, holy shit, it might be something, you know, really worth your while.
Yeah.
So two ways that you can gain money. One
Yeah,
is that because you have the property.
Absolutely.
The blockchain appreciates, then you can make money.
Yeah, and I don't think, it's been hard to convey on the website, it's been hard to convey in videos and even in pitches, but I've been doing this a long time. This shirt is like 2 years old, you know? We've been doing it a long time. The infrastructure is so solid and set up. We spend so much money. I took out 500 grand from the properties to do this. So we're invested, you know, to make sure we're sound. Our infrastructure, our use case. Let's talk about use case for a minute.
Okay.
So all right, so how do we get properties? How do you get people to buy your token? All right, well, we're a SaaS software, right? We're a SaaS property management software company. So our platform. So in other words, we have our own properties, which by the way, Block Park Technologies owns 35% equity as a limited partner in a development company called Block Park Holdings, which is the Downtown 57 and many others. So we're an equity partner in that. So a lot of security tokens in real estate that you see right now, they're not exploring the true value or like what you can really do, or you know, they don't delve deep into what it can do for communities or whatever. So it's a fun. They're like, oh, we'll sell security tokens, we'll raise money, and that money will buy real estate, and we can liquidate it, which is great. Well, Block Park does that too, but you know, that's just the back end aspect of it. Who cares? You know, it's about the community, it's about the people, it's about the owners making more money, It's about everyone making more money, right? And increasing a stronger economic output. So, where was I? What was I talking about?
Use case.
Huh?
You were talking about use case.
Use case, right. So by selling, by doing our own property management in our own buildings, so that's use case right there, but by selling the software to subscribers, let's say I go to, and this is coming back to your question, so how do we maintain the value? How do we keep, keep it close? At least initially, because we don't want to be associated, we don't want a stable coin.
Because the thing about it is that like stable coin, that's what Libra is doing.
Right, we don't.
Libra is creating a stable coin.
We don't want that. We don't want that. So, but we do want value, right?
Yeah.
So how do we do that? Okay, so we have 44, let's say we raise the money. Let's say we get $4.4 million, fantastic, great. So now we have 44 million shares out there that will eventually they'll migrate to a token. Great, okay, those are what standards. So we have about 60 million tokens left. So those 60 million tokens, let's say we go to a REIT. Our target client, our target subscriber is like a developer, a REIT, a property management company, someone like that. So we're saying, hey, let's say these guys have 100,000 units under their belt. Say, hey, give us 30,000 units, okay, for free. I mean, we will give you our service for free as an API, right? As a application program integration interface. So we're going to give you our API, which is just a token economy, and we'll do it for free. And by the way, you get all your revenue, you get all your money. However, all the tokens come back to us minus the 5%. However, we can negotiate a percentage of security tokens for you. So the owners are like, well, I don't know about security tokens, whatever, but I get all my money, you're gonna give me my property management on blockchain, so I get all that, the trustless network for free, automated accounting, verified financials, all that stuff. Sounds good. All right, let me get 25% of these security tokens. Great, okay, so now they're getting that. Let's say on 30,000 units, let's say the average unit rent is $2,000. So on 30,000 units, it's $60 million a month. Boom. So we have 60 million tokens, 60 million a month. Boom, that's 1-to-1. Now I don't know, we're gonna have to use and really test out the tokens in our token economy, which is great because we have time. But we have our scope of work, our proof of concept will be ready in about 3 months. It's just onboarding. It's really just like our internal exchange that we're doing. And my developer on the tech side, he's a former Facebook manager. He managed a team of 70 people. He's incredible. He's turned into a really good friend. He is so good. He's so smart. MIT grad. The guy knows his stuff. So, and he's like, it's easy, man. Just give me some money. Just get the money. So anyway, so that's our use case right there. So we can monitor on we can do like I don't want to say a fake token, but like a temp token that doesn't have value, but we're just trading with it. And even though our tenants can't really trade it, or they gotta hold it, but we can replace them with our security tokens eventually when we do file that Reg A. So that's great. So we can monitor. We're like, okay, so we're trying to get 1-to-1 initially, and just try to do market makers and making sure we. There's no pump and dump. Our investors are the only crazy thing that we don't want anyone who, let's say it's one person who invests $4.4 million, we would put in a contingency where they couldn't just dump the 44 million tokens because that would kill us. They would have to let us know. It would be like a thing. And at least give us the first right of refusal to buy them back or whatever. But anyways, it's all about the stabilization, not with fiat, the stabilization of our ecosystem. And with that, so there's 100 million tokens circulating. We'd have another 100 in reserve. We can also burn tokens if we need to. But we're trying to maintain our own ecosystem. But unlike the Fed, we can't print more tokens. We can burn tokens, we can't print tokens. And what's great with that too, if we increase, after a while, like I said, you can quantify the yield and say, okay, we're making 6% with these tokens annually. So now, as an owner, as an investor or whatever, you can now build housing where you couldn't build housing before, like Las Vegas, where it wasn't, the cost to live isn't high enough as the cost to build, like in Oklahoma or something like that, because you can't get $3 grand a month for a 1-bedroom. And you can also keep rents attainable, unlike Los Angeles or San Francisco, New York, where we don't have to keep raising your rent to keep the investors happy and keep raising the yields, because we grow our yield with how much we grow the company. and everyone's invested. We call it community profit share. Question.
How scalable is it?
So scale. I mean, we can go all over the world.
So local block parks everywhere.
They don't have to be block parks.
Why not?
Well, so the block parks are, so a block park is basically, block parks are owned by Block Park Holdings, which Block Park Technologies owns 35% of. Those are our buildings. We're getting the net operate. So here's the revenue. So revenue is generated from the software service, okay? And it's also generated from the 35% ownership of Block Park Holdings, and we own the property. So yeah, so we're collecting our tokens, and if we have a 5% minimum increase annually, we can now take those tokens and we can liquidate them and we can build more properties. So, and by the way, it's publicly traded, right, on an open exchange or unrestricted security. So why do we buy Apple stock? You know, because they make iPhones. So eventually, people are gonna be like, hey, this Block Park company is great. I'm gonna invest. So they start buying the tokens outside of they become our ecosystem, but outside our Block Park, our internal Block Park ecosystem. So it ends up being really great, and everyone kind of partakes in the community, and it's kind of win-win-win.
So Daniel, which company people would be investing? Because you have the one IT company which offers the service as SaaS.
Yeah.
And then you have this Block Park company.
So right now, the offering, anyone who invests in the IT company gets both. They get, so what that is they get a equity contribution with the general partner. So let's say you want to invest 100 grand. So your 100 grand gets you, it's 10 cents a token. So you get a million block tokens. But your 100 grand goes into the equity fund that comes in with the equity contribution for the development. So we have one term sheet right now. It's for 15 million from a company called Pace, which is great. They're like a mezz lender. It's kind of like a second. The senior lender wants to see, the equity partner. We're talking to a bunch of people. They're the ones building the stacking order and all that stuff. They're doing it, but we will be with them. We as part of an equity contribution. So let's say you come in with 4 million. You're like, hey, I want a bigger position. So what's great about this, and this is in the PPM, Norm. What's great about this is that company hasn't been formed yet. So we leave it open. So let's say somebody comes in and is like, you know what, we need $10 million to build it. That's it, as an equity contribution. So let's say, you know what, we want the stacking order to really favor us. We want more of everything. They would have that leverage because we would build that limited liability company and write those terms then and there when it's set, when everything's in place, which is good. It gives us options, which is what you want. Let's say you have 4.4 million. So okay, great. So that 4.4 million, Block Park is good. You're in. Not only that, but Block Park has super leverage going up against a general partner, an equity partner that comes in. At that point, they're coming in with 5.6 or whatever, or 4.6. So it's all good. It'd be like 50-50 when the waterfall happens. And if you're like, hey, $10 million, we're good. I mean, that's, you have kind of full saves, most leverage, whatever you want to do. And my big picture, what I want as CEO, I'm for the software, man. I think that's the big play. But the real estate's great. I made my living on real estate. No, definitely, with no question. And I talk to, I have a lot of phone calls.
Execute your stuff. All about your execution. How do you execute?
Yeah, exactly. And people say, well, if people steal your idea, did you patent this or whatever? We can't patent it. We try. The problem, because it's the software, right? It's the proprietary software that system, the under the hood ATS. So you're right. Other people can do it, but it is about the user. Raj always says this. He says it's about the user experience. The user experience can always be better, right, Raj?
That's right.
It can always be better. So here's what's cool.
His name is Raj too.
So yeah,
It's Raj too.
your families probably knew each other back in the mainland. So what's great about it is the onboarding ATS is only the first step. That's scratching the surface. Ultimately, what Block Park management software will be, which is 2.0, would be like LinkedIn meets Craigslist meets Facebook, right? It's job boards, community building. It's it's everything that wants to bring people together. We can incentivize people to post stuff and give them block tokens or whatever to really incentivize people to engage, and that's what the software will be. It's social, and that's 2.0, and that's what it's all about. And like I said, I made my money in real estate, and real estate's great. It's safe. Block Park gives you the what do you call it, the up of a tech company, the benefit of having the explosion, the 1000x, and it gives you the security of a real estate asset, which is nice, and it's brick and mortar, it's solid. So and you're in as a developer, and we're 30 months, so 30 months to completion over. So all right,
Any other questions? When's the expected launch date, you think?
This year, I mean, for sure. To definitely have our MVP.
It seems very impactful, I think, to any community where I think, you definitely could scale it into a lot of different types of cities, getting even into the impact investing side.
Yeah, well,
it's definitely a very, very localized type of impact on that ecosystem. So I think you're headed at a very great direction.
Thanks, brother. What's cool is another whole aspect of it. A lot of people, I don't talk about this much, but so on the 4th floor we have a co-working space. It's 30,000 square feet of just co-working. So if we got a WeWork in there or something like that, or one of these co-working spaces from Asia that want to come over and have a presence in Las Vegas or whatever it is, they can have our software running through them. If you're a co-working space like WeWork, I want to join WeWork, I can get money for renting from WeWork.
Buy the coffee with the
It's the API. It's like man, it can scale like crazy, and it's a security. It's a true dividend-bearing security instrument where it's like shares of stock and a medium of exchange. So you can use it as a payment, which is what this new technology is all about. Plus blockchain, which is that kind of. Yeah.
All right, thanks a lot, everyone, for coming down and continue networking. It's going to turn off the scope.
Yeah, thank you, everybody. Yeah,